Hi everybody, this is Gary Dean with Sentiment Timing, and this is a free video report for Tuesday, January 5th, 2015. First off, Happy New Year, Happy Holidays. I haven't really even put one out for quite a while because everything was in cruise control on our end, and with the holidays coming around, we didn't really want to be misleading anybody. The moves that were going on were happening pretty much whenever sentiment was hitting any kind of extreme, and that was both on when there was extreme bullish sentiment and there was extreme bearish sentiment. So whatever I went over, you weren't really going to be able to use it during the holidays, so we just skipped it. But anyway, the good news about what we have in 2016, which we're pretty excited about, is that we're pretty much going to have the same type of market that we had in 2015. Now, many will cringe when they hear that because we've seen the market move all over the place, up and down, and ended pretty much right where we started. And anybody who is a trend trader or looking for, just to jump on the move and hang on to it for months, pretty much made absolutely nothing or got wiped out because they got stopped out of positions all the time. For traders, with what we do, it's the best trading environment that you could possibly have because you're anticipating the moves. You know when to expect them, and you position yourself, whether using options, futures, whatever you want to trade, for the reversal. And the moves are huge, so there's a lot of money to be made with it. And I've gone over this where it's pretty relaxing just knowing what the other traders are doing through sentiment, because it's like playing Texas Hold'em and looking at your neighbor's cards. You know when to start positioning yourself for the reversal, and you just make sure it lines up with the specific turn dates that Woody's announcing, and then we match it up with some divergences and take a position. So let's get started. At Sentiment Timing, we believe that human beings in the markets are irrational. There's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these irrational elements through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, which project when to expect market reversals. And from there, we then just use our regular technical analysis and relay that to subscribers. So we use a timing matrix. Time is when to expect the reversals. Those are the specific dates that Woody puts out. Sentiment, it's how traders feel about the market. That's what I was telling you with the being able to look at the cards as you're playing poker with them. And then price is the technical divergences. So on December 22nd, I'm going to give you some examples of this. Woody had said that we had a 0% bullish, so everybody was bearish on this markets. And it was alerted on the 21st, and we got a very nice bounce into that. And we were looking for the profile to be bullish into 1224. And that's pretty much exactly what happened. And then after the 24th, we were looking for a decline into the 5th. So this was the time aspect of it. We knew the sentiment was 0% bullish. And then on the 24th, we had a 91% bullish. So again, everybody was bearish on the 21st. Everybody was bullish on the 24th. So let's take a look at what took place. Here's the 24th. We were expecting this move up all the way into the 24th. We got a drop, and then we had this one-day rally. Now, the question is, if you knew that we had high sentiment here, if you knew that we had a turn date happening here, were you buying this? Were you buying into this rally right here, or should you have been selling it? Well, we had technical divergences as well. So obviously you want to just look for resistance and short it. Now, me personally, I didn't take a position because it was during the holidays. I didn't want to take a position going into January 1st, but this is what I'm talking about is, it's not a matter of picking the exact date that the market's going to turn. It's having these clues in front of you. So we knew the turn was supposed to happen here. We knew a bottom was supposed to happen here. And we had divergences. So this was an easy fade trade if you wanted to take it. So let's move on and take a look. So the sentiment really is when you see everybody bullish, that's the euphoria area. You don't want to be buying the rallies on that. So again, we had 91% bullish going here, and we had 0% bullish going here. So again, you want to be looking to buy the capitulation, sell the euphoria. But as long as the turn dates are matching up, as well as the technicals from the regular charts, and that's really how you want to look at it, because sentiment's not a trade alone. But the thing is when you're able to follow these cycles, it really does work out pretty well. So let's take a look at what we have now. So this was the 90% bullish reading that we just had. From that dropped us into a 3% bullish yesterday. Now again, it doesn't mean that we have to, this stops to drop. But what happened was we kind of went sideways today. So we went up a little bit, but it was nothing major, even though we had some low sentiment. Why? Because the low is supposed to be coming in later this week. And it could happen, so you don't want to get aggressive on the short side. But the thing is that this was a little bit of a hint not to get aggressively short yesterday after the big drop. So if we take a look at the intermediate term sentiment, you can see that still has room to go before we're into this extreme bearish sentiment. And that's why, we're going to get some chop action along the way. But the one concerning thing that I would have as a bull, this was today, this is the money flow, and you can see that the S&P was only up 4 points today. And the spiders was number one on selling the strength here. So that is not a good sign. Doesn't mean that it has to go down tomorrow, but it's saying that the big boys are selling this particular move right here. So right now we have things that are moving in place. We were expecting that we were going to get a bit of a drop into the fifth, and right now what we're looking for is we're probably going to be finding some kind of bottom in either this week or early next week. We don't really have the bullish divergences yet. So if we take these lows out, that would set up a time when you really want to start looking to possibly buy. And as long as it's lining up with the specific dates that Woody is looking for, even though we hit the first one that was today, the 5th, we still have some other windows that are open to make a low. And since we don't have bullish divergences, it would actually make sense to take these lows out. But you want to be careful, just because the move had happened already. We had this big move down. So instead of looking to short, I would be more looking to buy down here, and we would have the bullish divergences. And really the support areas you want to keep an eye on are anywhere from the 1990 all the way down to the 1960. So you don't want to go aggressive all in, but you start layering in specific areas. Now, if it takes this support out, then we're probably coming all the way down to the 1948 level and closing this gap. So right now, I would, we have sentiment that's been ticking a little bit low, but we don't have a specific, we're not in that exact turn period, and we don't have the bullish divergences on the 60-minute chart. So keep a neutral bias, and that's really the best thing to do it. And that's really all I have for tonight. This is what we do. We use time, sentiment, and regular technical analysis. We have the Woody Dorsey that's been doing this for over 35 years, sentiment data that nobody else in the world has, as well as these technical timing indicators. So it's been working fantastic. Like I said, we have a 2016 is going to be fantastic because we're going to continue to get these big moves up and down, and that's all we need to make a ton of money. And on top of that, if you decide that you want to subscribe, you're going to get a free membership to Marketspath. I do these videos pretty much every night. That's really the advantage of it, plus you get what trades I'm making. So if you guys are interested, I'm not sure if we're running a special tonight, but in any case, have a great week, and I'll talk to you guys next Tuesday.